This is Fortitude FX here for the recap from Monday 26th to 7th Friday this week on GBP USD. So let's get started. Looking at the daily chart right now, you can see that we started our week on a Monday, June 26th, from this inside bar, and then sort of kept falling until Friday when we had that massive jump. And you can see the reason why. We had a recent break of structure, our daily structure here. And what happens after a break of daily structure? We have a pullback. That's right. So we were anticipating a pullback, and we did get that pullback into this daily demand zone, which it touched right here, just the surface of it, and sort of went running high. So anticipating next week, we can move from this supply downwards. We can continue moving upwards for another break of structure. This is in high discount area for the range that you see over here for the daily. But that is something that we'll cover next week on Monday's pre-analysis. Okay, so this is your daily. Let's move on to 4H. What happened? Okay. So here we are. 26th, it's right here, yeah. So 26th, Friday, and then 26th started here. We are looking at this bar here, this indecision candle, the big indecision candle. So when I walked up to the charts the morning of pre-London Open, I noticed this demand zone here. We had a massive spike, basically a sweep zone over here, which I marked right there. And then we had this demand area. Now, a fairly small demand area. I'm not bothered by it being run or not run because I wait for confirmations, and this is a 4-hour chart. I never take risk entry, so I always, whenever price moves into a high probability POI, that's where I look for confirmation. So this is where I came to the charts, and let's 9 o'clock maybe Monday 26th, and then let's look at what happens on 1 hour. Okay. So what do we have on 1 hour? 26 right here, right? So basically, if you look at the charts, this is the demand zone, the 4-hour refined to that 1 hour, right? So this is the 4-hour thing, basically. Which I showed you in the previous time frame, and this dark area here, this one here, that's your 1 hour, right? Refined. So in this case, it happens to be both the same. We came in around, when I come up, it's 9 a.m., so I'm in a GMT +4 time zone. Anyways, so what had happened was that a price swept this high, this liquidity that you see me mark here in orange, that's a 1 hour, right? It swept and it fell and it gave me a chalk, right? So when a 1 hour gives me a chalk, that's a good indication that the price is ready to turn. And it did that with a sweep of liquidity on the 1 hour chart. So I was fairly confident that this new developed demand zone is going to hold and it will go down, right? But what happened? So when I was looking at this area and I went into my 15-minute time frame, what you'll see is that it quickly came into this 1 hour demand, right? And let's go back quickly. So where were we? Right here. So it took, this is the 1 hour POI that I was looking for. We had that 1 hour chalk. It came down, right? It gave me a nice V-shaped reaction and everything. But at this point in time, I did not want to leave a limit entry over here, right? Something along the lines, let's say, maybe at this point in time here, I didn't want to do that. And the reason why, 3, 5, whatever are that you guys are wanting to have. The reason why I did not want to do that is because we came into a demand zone. Now, if we come into a demand zone, we don't know really what's going to happen. Either that demand is going to hold like it did over here. So in this case, it saved me from a loss. Or that demand is going to fail, it's going to come up here and it's going to go down. The probabilities are equal for both to happen. but the confluence is not with me because it came into a demand. So that's -1 for a confluence from me, right? So if this demand did not exist, I would be happy to get involved in a trade for a short here, downwards targeting all this liquidity here. But anyways, it went a little bit higher, and then it retraced back heavily. So here's what I noticed. Now let's go back to the 15-minute, 1 hour chart, sorry. So here's what happened, right? And then you have to look at objectives of your legs, right? So what is the objective? Why does 15-minute turn bearish or gives us a chalk in either direction? Why does the 1 hour gives us a chalk in the either directions, change direction before 4 hour does, and then why does the 4 hour do, right? So every time frame has an objective. What that means is that the 15-minute, and if you go down to 1 minute, 5 minute, 10, whatever time frame that you're looking at, they have to change direction in order to go to the objective of the higher time frame leg, which is the mitigation, right? So in this case, if I look at my higher time frame, so medium time frame in this case, 1 hour, this would be the leg, right? From here to here. So if I were to quickly draw a gain box right there, and let's do this, all right? So this is the leg on the 1 hour. It pulled back into the equilibrium of that, and then it could pull down or it could pull up. But for me, the objective of this was done, right? Because it went into supply and then it started pushing down, right? So for me, the objective is done. So what happened then, and I did not get involved over here, we had a nice reaction from this point in time, and then it came into this demand, 1 hour demand zone, and this is where the boss happens, right? So what are we looking at? So let me show this to you. We had this moving down. It mitigated somewhere up here. The anticipation is that this low is weak because we had a change in character. We had 1 hour chalk, we had 15-minute, and it pushed down. So if the objective of this lower high is to break this low, it did not meet it, right? And it started pushing upwards. And in fact, it had that 1 hour demand and it swept the demand and it went upwards, right? So at this point in time, I'm thinking that if this high is not closing below this low and it swept that aggressively and closed above, sweeping this 1 hour demand zone, I'm anticipating maybe it wants to do a little deeper pullback, right? And maybe somewhere into this area. So I'm thinking that this high is now weak and it's going to get run. So let's look at this again. Let me get rid of that. So when it swept this, I immediately moved into my 15-minute to see what's going on. And where are we now? Okay. So it came back into that 1 hour, right? It pushed out of this demand, came into that, and then the anticipation for this was that this high is going to break the low over here, but it did not break the low. It had a very nice reaction, a very pushy reaction, V-shaped reaction, and it gave me a chalk. And at this point in time, because the next supply, 1 hour supply was quite far off, I was happy to get involved on this pivot candle moving upwards, even though I realized that I'm playing a counter deeper pullback, which is a low probability. But the way the confluence is stacked up, that it went deeper, it met the equilibrium, right? And it failed to close the below. The demand was there. It swept the demand and it gave me a chalk on 15-minute. So for me, the confluences are high. And this is where I got involved into the trade. So if I were to show you some of the trades that I took right here. By the way, I use this subject tree and I save all my trades or no trades, break even, losses everywhere. So if I were to show you this, so this is how I got involved. Even at this point in time, this is the sweep of the liquidity I was talking about. This is the chalk that I was talking about. This was the last supply that failed. And this was the last high that got me involved. And I typically enter on 25% of the pivot candle. And once it broke even, broke this high, I was break even. And at this point in time, I'm not really too worried, right? It's break even. Either it's a win or it's a loss, or it's a break even, but I don't lose any money on it, right? And I don't lose sleep. So typically, I will not let my trades run overnight, or I will not enter that late at night into the New York session, late into the New York session. But the way it was formed so cleanly, and I had a break even, so I was happy to let it run overnight. So once it ran, and then I got involved and I left it run overnight. Then let's go back to 1 hour. So I'm going to hide this now a little bit to make it a little bit more cleaner. So what happened on the 1 hour? Now this low, the objective of this low is to have a deeper pullback, right? And then we see that it closed up here, it swept, and then it pushed down again, right? So now I'm thinking that it took all of this liquidity because it failed to close above. This is the next day at pre-London almost. It swept all of this liquidity and it had a massive push down, right? So I'm thinking that at this point in time that this is weak because give me 1 second. So let me go back to the 15-minute. Where was it? Right here. So when it came back into, so it went up here, it came back. What I was thinking was that I'm going to go into a deeper pullback, right? Because this high, failed to do this. This high failed to close below, and it gave me a nice reaction. Again, this was the chalk, and this was the second trade that I took right here. So it was a flip zone as well. So we had a demand. It had a reaction. The reaction failed. We have the flip zone over here. It took some level of inducement on the 15-minute chart. It failed to close below and gave me a nice entry model for myself. And then I got involved. In this case, I got involved a little higher because I wanted to make sure that the order flow has shifted. So typically I will not go to a lower time frame, but in this case I did. And when I was convinced, that's when I entered the trade, and then I let it be. So both I had two trades open at this time. Both of them were winners, and I closed over here because I was seeing that the price was struggling to close above this. So when I see that sort of a pattern, I close my trades. And those were two winners there. Let's move on. So let's go back to the 1 hour chart. And then where we are. So we covered this, and then we came up over here on a Tuesday. Nothing really is happening on a Tuesday. It was a fairly slow day. It was quite ranging market. And if you look at this also, right? So if you look at, we had a huge sweep, right? This, if you look at, this is a 1 hour chart now, right? If you look at this push downwards, that's a fairly good, strong impulse push, right? But if you look at what's happening here, it's a long time frame for consolidation to happen, right? The ranging to happen. So typically you don't want to get involved in this. You want to be involved in some really high, quick impulses in either direction where you're getting clean price action, clean entry models. But if something like this comes in, becomes low probability. Of course, if a clean setup does come in here, do take it per your trading plan. But I would recommend that you avoid this because this becomes low probability. So coming in, again, we're straight looking into 1 hour chart. We had a chalk. Nothing happened on a Tuesday. And then on a Wednesday, we had a chalk, right? At this point in time, what's more likely to happen? So once we have a 1 hour chalk, that means at that point in time, I'm waiting for this newly formed supply to be corrected, and then I would have looked for a 15-minute model here to give me a push downwards. But in this case, what happened was, let me get rid of this. In this case, what happened was the price had a chalk, it ranged for a bit, and then we had a massive push downwards, right? So there was absolutely no way that I could have gotten involved myself in any one of these trades, the way at least I trade. And a lot of traders get trapped in these sort of movements because FOMO kicks in. You want to be part of that massive push downwards, at least get some pips out of the market. But if you're not playing mechanical to your trading plan, more often than not, in the long run, you will lose, right? So don't be scared for massive pushes and you're not involved in the market, because tomorrow is another day and the markets will move and so on and so forth, and it'll happen till the market exists, right? So there's no point in losing or risking your capital on trades that you've missed. Simply wait for another day. So in this case, what happened? We had a massive push downwards, then we had a correction going upwards, and then we had another push downwards. So Wednesday, we had all this push downwards. I did not get involved. We had nothing really going on a Thursday, nothing to my plan. And then we had another push on a Thursday. So at this point in time, my chalk for 4H was here. And then once I broke this structure, this would be my protected swing structure on 1 hour, right? And because this is too far and the chalk is too far, we have to play these internal ranges. So, and these internal ranges, the chalk happened. This was Thursday night, Friday, Asian range, and then coming into Friday, we had a new demand, because this new demand swept pretty much all of it over here, right? Now we are sitting in a swing range at extreme discount, so it was high probability to buy this. And going into 15-minute, for me, there was no entry model, right? So when it came back up at this point in time, I was monitoring. It did take out all of this liquidity, and it gave me a good entry model for me, right? So because it had a nice V-shaped reaction, we had the chalk here, we had the last supply that took out all of this liquidity, that got broken. So there were many confluences, right? We were sitting in the heavily discount area of the swing leg. We just had a 1 hour boss. We were anticipating a pullback. So a lot of things were on my side, except the 4H chalk. But when this happened, it came again into a supply, a 1H supply. And this 1H supply, did give me a reaction, and it did, at this point in time, because this was my original thought pattern, that I was going to look for a sell over here. But look at that, my chalk is all the way here, right? And if I was interested in a sell, I would have gotten involved over here. Now, if you were a 5-minute or a 1-minute trader, what happens is many times you get caught onto the wrong side of the market, because there are a lot more traps in those time frames, right? 15-minute is a very hands-off, very easy, stress-free approach. You can monitor, you can set alerts, you can go about doing your day, and when those alerts come in, you come in, monitor your charts, and if there is an entry, you set a pending order and leave, right? With 1 minute, 5 minute, a lot of traps, a lot more difficult price action. You got to stay a lot more focused. And in this case, it saved me a loss, basically, because I was looking for a sell. I had set my alert over here for a chalk to happen. And then once that happened, I would look which would be the most probable zone. But then it came into this demand and it kept going up, right? So if I had gotten involved in a lower time frame, that was 100% loss. But because 15 minutes takes a lot more time to develop, and when 15 minute typically commits, it's going in your direction. In this case, it just did not. And then we had that pullback, we had the structure break, and then we also had a 4H chalk. Now, why did I have this zone marked? Because it was a zone of interest for me. There was this big wick here. I wanted to include that entire candle to see what happens, how price reacts. And I would typically mark these zones, right? And the reason for that is not because I want to immediately get involved as soon as it hits that zone. I want to see how price develops within those zones. This for me was low probability, as I explained, that this could be inducement for a higher probability POI over here, and that's exactly what happened. The price just blasted through it. Now, if I was setting up a risk entry, that would have been a straight loss, right? So for me, I had to wait, and for that to happen, you can already see my alert was set up over here. And if had gone down, came back, gone down, but it was the end of session and nothing really to it. So coming back to 1 hour again, let's see what's happening. Monday you will get a lot more analysis than this. But if you notice, you had a sweep of the structure over here, and then it broke some internal structure. So this would be a zone that I would be interested in. The reason why I say this is because now we are in the premium of that 1 hour, and it could be a pullback into a more discount areas, flip areas over here to keep pushing higher. Or it could just continue higher, right? And we'll talk more about that in our next video on Monday morning. Hopefully you had good information. If so, please do subscribe and like. I'll keep bringing in the content, and if you have any more questions in reference to entries, structure, my markings, always leave a comment and I'll get back to you. Thank you guys, and you'll have a lovely day. Bye bye now.